Hi, everyone. My name is Tej Yale, and I'm the founder and CEO of Think Impact. We're a marketing company based in Rochester Hills, Michigan. Today, we're very fortunate to have Mrs. Arlan Hamilton, founder and managing partner of Backstage Capital, be our guest today. Thank you for being here, Arlan. I greatly appreciate it.
Thank you so much for having me here.
And so some of you may know Arlan from Backstage Capital. It's a venture capital fund that has invested to date in businesses that are female-led, people of color, LGBTQ, and she has invested in more than 130 businesses to date with a revenue of 7 million, I believe. And she started this fund back in 2015, and she literally built the firm from the ground up. She used to stay at the San Francisco airport and had big dreams of VC, to enter the VC industries. So it's been great to follow your journey, Arlan. And some of her many notable accomplishments include making history to be the first African-American that is not an entertainer or a sports athlete to grace the company of Fast Company. She established the first African-American scholarship called the Oxford Arlan Hamilton and Arlene Butler Sims Scholarship at Oxford University in London, England. She is the author of It's About Damn Time, a book that just came out. And she has spoken on many of the world's biggest stages, including South by Southwest, the Makers Conference, and being featured on the Chase Jarvis Show. So if you don't mind, Ms. Hamilton, I'll get right to it.
I ask you to call me Arlan if we can.
Oh, okay. Sounds good. All right.
Thank you.
Yep. And if it's okay with you, I'll ask some questions, then open it up to virtual Q&A, and then maybe round out with some other questions that I have.
Yes, and I just want to point out, just real briefly for anyone who's listening later, that I was the first Black woman who's not an entertainer to be on Fast Company. I know there have been Black men who have been on who are not entertainers. So I want to make that distinction. And I also want to make sure that there's a distinction that the Oxford scholarship is for citizens of the UK, so rather than African Americans. Just want to make sure, because you did a great job introing, but I wanted for anybody who might have picked up on that, cleared up.
Okay. Sorry if I...
No, you did a great job. It's just like these little tiny things that I want to make sure that we should all speak up for ourselves and clarify things.
Yeah, absolutely. So the first question that I had was, you started Backstage Capital in 2015, literally when you were homeless and trying to build this fund up. I was just wondering, I know you talk a little bit about this in your book. If you could kind of expand on your startup journey of Backstage Capital.
Yeah, so I was in my early 30s. I'm 39 now. I was in my very early 30s, and I had gone through several different types of careers, but I had always felt like an entrepreneur in some way, but nothing ever really took off. Had a lot of people like interested in what I was doing, but it never worked like financially. So I found myself with a lot of housing insecurity, and just it was just tough financially. But I was always meeting different people and working with different people. And I always had that bug to work on a company. So when I started learning more and more about Silicon Valley and startup world and all of that, just like everybody here probably, like, I started feeling like it was something that really resonated with me and it made sense to me. And it was like, oh, that's like the group that I'm supposed to be in, because I'm an entrepreneur, I'm a founder. I just didn't necessarily know what the structure was supposed to be. So I set out to start a new company in my very early 30s, and in order to do so, I felt that I needed to do as much research as possible. So I talk about in the book, It's About Damn Time, I talk about the very first thing we talk about, and as we get into the book, is like gaining as much information as you possibly can and how you can do that, because that was just so important to me. So I was doing all this research, and in the book, I kind of lay out how to research things, how to lay things out. And I came across the statistic that 90% of all venture funding goes to straight white men in a country where they make up about 30% of the population. And that was what, 2010, no, 2011 or 12 that I was learning that. And it was just so odd to me. It made no sense to me. And I don't, anytime something doesn't make sense to me, I'm kind of like, I have to make it right. It feels like it's almost painful physically if something doesn't logically make sense. Um, so I just set out, I was like, yeah, I guess I can still try to raise capital for a company, but the problem is bigger than this. And maybe I can raise money, maybe I can get started, but like, I don't know, I just felt like there was just such a bigger issue at hand that me being successful independently would not make enough of an impact or be enough of a ripple. And also, who was to say that I could be successful in a game that is that rigged to one side? And by the way, I was saying this to white men who were in my orbit, and they were agreeing. It wasn't that I was like, oh, we're going to set a cross and it's going to be us against them. It was, this doesn't make sense. And any person that I know who really likes competition should want this to happen. Should want there to be more people creating things and being their competition. So I decided I was going to, instead of raise just for my company, I was going to raise some money to invest in other founders who were like me, who were people of color, others who were women, others who were LGBTQ. And sometimes they were more than one of those things, and sometimes they were just one. I'm all three, so to me, it was like starting with what you know and practicing what I preach there.
Sounds great. And for those of us that may not be familiar with venture capitalists, what do you see as the biggest misconception of the VC trajectory or the VC landscape? The stories that
I
you've
don't
had.
know what the biggest one is, but I know that a lot of people think that if you're a venture capitalist, you're rich. But most venture capitalists, a lot of them are, a lot of, especially if they own the company, they own the fund. But a lot of them are not rich because they're investing other people's money, and so there's a certain agenda that some managers have that you may not know about, which is, in order for them to be able to pay the bills, they have to have a certain amount of money that they manage, so they can take a 2% or so, it varies, management fee each year. So sometimes the alignment is not there with the founder and with the ecosystem itself. Sometimes, because that's the way most funds work, where, and I do break this down in the book too, if you're curious, I break down towards the end $100 million fund in the economics of that. Where you have this fund, and if you don't have enough under management to your liking because you don't have enough management fee, or to have the right management fee to your liking, you might go out and try to raise more money than you actually are good at deploying, which makes things harder for adds to a bubble. It also makes things weirdly valued in the market. We don't have that issue because we have such a small amount under management relatively. It's millions of dollars, but it's relatively small for venture, that we actually hacked our way in different ways into having operational capital. So we're not bound nor led by some of those agendas that other people are led by, where it's about how much money under management they have to keep their lights on for 7 years. For us, it's more like, what can we do to optimize, no matter how we're doing, to always optimize for our portfolio companies having the best chance at succeeding, and how can we support them in the event that they don't, so that we can continually have a relationship with these founders who may go on to do a second company or a third that we'd like to be part of. So there's that misconception that it's just like raining money everywhere, that it's somehow easy to break into. It's not easy at all to break into. It's very competitive. There are only a few slots available, and also the politics of it are really, really crazy. That's why I started my whole fund by myself outside of that system. I also want to point out that my mom is listening. I can see her number now. Your number is listed. So what I'm going to do, Mom, is ask you, ask Chacha to help you take that, change that. You can go to participants and change that. But anyway, point is, she's there and she's part of the scholarship that we did at Oxford. It's the Arlan Hamilton and Erling Butler Sims Scholarship.
Sounds good. And then I was also wondering too, Miss
I'm
Arlan.
still here just for 1 second. But you can keep going. I'm just going to take my video down.
Oh, okay. I was wondering too if you could talk about the transitional period to when I believe Ms. Susan Kimberlin was your first angel investor. Can you expand a little bit of how you got that first initial investment that jump-started this entire project?
Yes. So I had been working on the fund for like 4 years or so and hadn't gotten anywhere when it comes to raising. I had gotten very far when it comes to talking to founders, working with them, seeing what they need, helping them in different ways, et cetera, et cetera. And so it starts by, I saw online that there was going to be this class. I was living in Texas, and I saw online there was going to be this class for 2 weeks in Silicon Valley at Stanford University. And it was going to be for people who wanted, it was called VC Unlocked, and it was going to be for people who wanted to be VCs or venture capitalists or people who wanted to do like angel investing, things like that. So the course cost $18,000, I think, 20 or 18,000. And for some reason, I mean, I had no money whatsoever. Like it was $0. But for some reason, I saw myself there. I said, I'm going to be in that class. I have no idea how, but I'm going to be in that class. And so the first thing I was able to do, they had after a while, they had a bunch of applications, and it turned out that mostly men were applying. And so they opened up the scholarship of 50% off for any woman who was nominated and who got accepted to like a 30-person class. And they were going to do that for up to 50% of the class. So I got nominated by reaching out to everybody that I could, who I met along the way, who might have some way of reaching out. I said, can you please? And it was some people they didn't know, a couple people they did. And I was nominated. So you had to be nominated 3 times or something. It was a lot of barrier to entry, but kind of, some of it was artificial so that the value of the class would be heightened. So I got accepted. I then did a crowdfunding because I hadn't gone to any school before. So I was like, well, maybe some people will throw in $10 or $100 to help me go to the class. So I did, and Chris Sacca actually put in the first $500 just because I emailed him out of the blue and said, well, this is the class I'm taking. I've been telling you that I want to do this, and I'm taking this class. So he put in the first $500. My friends and family put in $5, $10, $20, $100, wherever they could. And I was able to put together about 3,000 not of the 10, but of the 12 or 13 that was needed for me to fly there, to stay there, all of that. So I went out there. I met Susan Kimberlin in that class. And she was an angel investor, still is, who I was able to teach her a few things about looking at companies, doing diligence, things that I had taught myself. I was able to talk to her from a different lens, and give her some value, offer her some value. And the same way she was able to talk to me from the point of view of someone who was around my age, who had built up capital from working at a major company or a couple of major companies and earning equity and earning salary. So that was a different world that I was from. And it took 3 or so months to convince her, because I wasn't looking right on paper. I didn't have my own bank account. She didn't know me from Adam. But over time, I kept proving myself. And September 2015, she said she was in. It was that determination the whole time. And part of that, part of that time, I was actually back on the road as a tour manager. Teresa, do you mind going to mute for me? Thank you so much. I appreciate it. Yeah, so that's it. It was just that determination. It was that just kind of I kept doing the thing itself, the job itself, rather than just waiting for somebody to come along and invest in me. And that's what I encourage a lot of people to do. I encourage everyone to do that. If you're looking for investors, first of all, you don't have to look for investors. There's a whole new way to do it. It's a whole other way of doing it. But if you are looking for investors, there's so much competition.
This girl, this woman.
This woman. Hey, Jose,
Oh.
Can you do me a favor and go to mute, please? Thank you. Okay. Yeah. So that's how I met Susan.
That's great. And then the last question that I had before I'll open it for some virtual Q&A was, I know that Backstage takes a lot of pride in investing in underrepresented and underestimated founders. So to that point, I had two important questions. I saw an article recently by TechCrunch. I think as of 2019, that less than 3% of female founders get VC funding.
Say that one more time.
So during my research through a TechCrunch article, I saw that less than 3% of female-founded businesses get VC-backed funding.
Yeah.
And so within the Silicon Valley realm or the VC landscape, what do you think are some specific measures that should be taken to kind of make that a larger part of the conversation to increase that percentage?
I think we've been having the conversation for years. I think action is needed, and there are a lot of people who are working on the action part of it. There are organizations like Backstage is a fund. There are organizations like All Raise, which if you are a founder or investor of any gender, I suggest you check out, because this is not going to be fixed, quote unquote, by only women trying to fix it. It has to involve all of us. So I think listening to them, there are experts and they have things outlined on their website. Right now, you can go to their website right this moment, All Raise, and you can look up things that first steps and things like that. And I think it's also going to take, there are a lot of women who have important roles at venture funds, at other investment funds, corporate funds, at Fortune 1000 companies, where they have a lot more power than they may think or may use, either way. And that can, in numbers, can make a difference, because we don't have to sit around and wait for venture capitalists to figure it out. Even as one, I'm saying that. I'm in the world, so I could tell you about it, but I'm telling you there are other ways. I'm working with a team right now that decided, okay, there are 10 of us who want to maybe angel invest. So we're going to get together from the same company, and we're each going to go look at companies to invest in together. And that could be like, $1,000 each or whatever. Or you can do crowdfunding, crowd equity funding, things like that as a group. And I'm going to be doing the best I can to help facilitate that and catalyze that. But it can start there, and it doesn't. So start there, continue there, all of that. It doesn't have. We don't have to sit and wait for some panel of men to say, okay, now venture capitalists agree that we should do it this way. Because I think that's what a lot of us might have been doing for a while, and that's not working. If we wait for them to decide to let us in, we're going to be waiting for a long time. So I think you go to the organizations that are already set up, that have already been spending the last several years or months or whatever, decades in some cases, just preparing for this. Other things you can do is, if you're a fund manager, if you are have any control at a fund, really think about who you're promoting. Think about who you're giving check writing abilities to. Think about who has ownership in your fund and carry. And carry is the profit from your fund. Who has carry? Who has the ability to make generational wealth based on your success? Is it just three guys in suits who you all know each other from the same college? Or is it really changing things? And also, the last thing I'll say is that when white women do make those strides that they make always consistently first, they need to make sure that they do not leave behind women of color, not because they're doing anything out of the goodness of their heart or they're somehow someone's hero, but because most likely women of color help them get to where they are, and either directly or indirectly. So they need to make sure that that door is kicked open for them and stays open. And then, we all participate. I think that's, it's important that we don't get complacent. That's why I try to say it real clearly to people. I try to be very blunt with people because I don't want us to dance around. Oh, well, we should start the discussion and maybe if you please let us in. No, tired of that. That's over. That time, you had that time. They had that time to let us in. Now we're saying we're coming in. We're coming in. We come in peace, but we're coming in.
Mm-hmm. Yeah, absolutely. And the second question that I had too, I guess keeping it current, is I think recently there was a lawsuit in Los Angeles where the women's soccer team had kind of filed a case kind of surrounding the gender pay gap between their male counterparts and the female team, and kind of wanted to get your thoughts about that. I think right now it's an appeal, but kind of get your thoughts on that if you've been following that or.
Yeah, I've been following it from a distance, not as close as I should, but of course, when you have people like Megan Rapinoe and Abby Wabash being so vocal, it's hard to miss, and I love that. That's exactly what I'm talking about here. Do I have thoughts on what they're saying, or do I have thoughts on the fact that they're not getting paid?
Yeah, I mean, on
okay,
making it a level playing field.
Let me tell you something, and they're literally trying to make it a level playing field. I love that. Let me tell you something. I know David Beckham because he's married to a Spice Girl. I literally know no other soccer player who is a guy. I know, so I can recognize most of the U.S. women's soccer team, and I can name several. The same goes with tennis. I know a couple of guys, either because they were I know that one dude because he was married to Brooke Shields because a woman made it so. But I can tell you, I know Venus and Serena Williams, Maria Sharapova, for better or for worse with her issues, but I know a lot more women athletes in these less than popular sports in the U.S. than I know guys. And that's just me. And of course, there's millions and millions of fans for the guys. Cool. But it makes no sense to me. It makes no sense to me. I'm going to even go a step further because I feel like I can and say that I almost no, I'm not going to say that. I just feel like the numbers don't lie. The number of fans, the people who brought in tennis from every country in this world, from every block in this world, owes everything to Serena Williams' popularity. Owes everything. The fact that she gets accosted every time she steps on a field and somebody has something to say about her within the organization is a travesty. But I feel the same way about the U.S. women's soccer team. I mean, it's just it's insulting, and it's injury to insult.
Okay. Now I'll just open it to virtual Q&A if anyone has any questions for Arlan.
Arlan, I got a couple of questions.
Yes.
Obviously, you started off tapping into the VCs and angel investors and everything when you got started. What are the two things you dislike and like about getting in touch with VCs?
Well, as from a point of view of
When you go and approach them, what are the two things that
yeah.
really gets you
So I don't
going?
necessarily approach them from wanting capital from them. I'm approaching them because I am one. So I'm approaching them and, talking to them about deals or things like that. But when it comes to some of the investors in our fund are also VC, so I would try to do it from that lens. I would just really like for venture capitalists and investors in general to be more open-minded and to be kind of live up to the hype. Sometimes I'm accused of not living up to the hype of what's out there. I'm accusing the VC world of that. When I first started learning about VC, venture capital, what I was attracted to was that they were risk takers, that they were innovators, that they were themselves were the entrepreneur, that they themselves were the outliers and could recognize other outliers. What's real, the myth bust, is that they're just really, really stodgy for the most part, and they get sort of set in their own way, and they don't stray from that. And if it worked 8 years ago, they're gonna keep doing it, even if they see evidence to the contrary today. That's just odd to me. It's very, very weird to me. So I just wish there was like more flexibility in their thinking, and so they would do a lot more research and things, and especially when it comes to diversity. What I like about VCs is that at least what got them there to begin with. I mean, there's something about you that has a entrepreneurial spirit if you got into VC. I don't know, even if you're not acting like it, like I just said, even if you're not living up to the hype, something that kicked you off into that journey is that way. So you have a lot of really highly motivated, highly intelligent people working on big problems and big solutions. That's very exciting to be around all the time. And I'll always call it like I see it. So I'll be critical. I'll give props where they're due. But it's almost like the thing that I love about them, I wish they would do more of.
And as a follow-up question, you being yourself as a VC now, what is your hit ratio in terms of being successful in your investment? What is the percentage? I mean, I'm not asking details. I'm just saying, out of the 10 investment you do, you're hoping one will click, so it pays off everything, or do you hope all 10 clicks? And
For us, for the strategy that I have, so I and our firm make many more investments than others might. We tend to be on the pace of an accelerator more so than a traditional quote unquote fund. So for us, that's the way the economics work. We of course want every company to do well. We don't expect every company to do well because we're logical people. We only invest in 2% of what we see, so there's a lot of diligence that's there. Right now, approximately 8 to 10% of our portfolio over the past 5 years has gone under. So when you have 130 companies, that's a great deal. But if you had 20 companies, it'd be 2. So then you have another 70% or so that is in like kind of the big portion of it, which is they are humming along, they're doing well, they're generating revenue, they're not anywhere close to dying, I guess is the way to put it. It's called that 65%. Then you have 20% that if I had to call it today and just put everything on the line and say, we have $100 million in follow-on capital, and it could only go to the companies that the 20% that I think have a shot at really, really going to the races. There's about 20% in our portfolio, so about 25, 26 companies who I believe will return our funds and be the ones that do the return on investment multiple times over. So that's, generally how it is, and that's how I look at it. I am also keenly aware that one of the 1, 2, 5 of the ones in my 65% column are going to surprise me and kick major butt. And some of the ones in my 20% column are going to fizzle out in a way that I didn't expect. So it's really, the best we can do is project and to keep up. And what we do at Backstage is we just kind of nurture each company the same way we would, not really thinking about how they're doing, just based on what they need. And I think that's actually going to be a great strategy going into this long term, because you can't predict, and people who act like they can predict are lying to themselves or to others. So that's how I look at it. I don't do anything with spreadsheets. I leave that to the rest of the team. I just look at it like, how do I optimize to see how the majority of this portfolio can do well? And if 20% of them does as well as I think they will, we will not only return to our LPs, but our limited partners, but we will outperform 85% of venture capital across the board.
So, as a follow-up, so when
That's
you
the third
do,
follow-up. You want to make sure? You want to make sure nobody else has a.
let me give opportunity to
It's
others.
becoming a one-on-one.
Sure.
Actually, I have a follow-up to that.
Okay.
What you were saying, Arlan, thank you very much for making yourself available and sharing your journey.
No problem.
I was curious, how do you go about doing due diligence on, what companies and which founders to invest in, particularly if you're dealing with a population that, may be coming from non-traditional paths and don't necessarily have the same sort of indicia that traditional VCs may be comfortable backing?
I don't think it's very different after observing many other funds and how they do their diligence. What I will say is that I think there's a lot of foundational stuff that I don't think people are made aware of when they're peering in, because, and I'm not going to assume I know what your role is, but for instance, I know that there's a major fund who doesn't do much diligence at all on any check that's less than $500,000, because they just don't have the bandwidth or the time or the desire to. And where they'll do the most diligence is in that follow on or in that later stage company. But no one is like going in and looking under the hood and saying, well, you didn't do diligence on these, you didn't do major diligence on these 15. What happened? Because they're looking at the bright star that happened. So for us to be right in the middle of it, I think we do more diligence than a lot of traditional quote unquote funds. And to do that at scale with the small team we have is just insane. So the first half of the portfolio, it was mostly me. So the diligence I would do would be to reach out. I would just look at the company, again, only investing in 2% of what I saw. I would look at the company. I would just kind of check their online imprint to see how long they'd been around. Can I trace them back on social for years? Can I, at least the founders, et cetera, et cetera. I would then talk to another investor of theirs. There was always kind of the least I would do is talk to at least one investor of theirs. And it wouldn't be someone that they would probably expect. I would kind of surprise them. I'd ask for a list and then go to whomever I wanted. And so it was like that. And then as the team grew and as our infrastructure grew, a lot of it was or has been a deep application process that is vetted, multiple rounds of interviews and challenges and sort of really digging deep. More and more, especially as Mark Cuban has been involved starting last year, there's been more and more structure around what documents they have to fill out. Cuban sent me a list of documents he would like for his portfolio companies within the $1 million that he invested to go through, and I said no because it was so intrusive. But I took half of it and I used half of it now, because you can learn in every experience. And so I just sort of stay true to myself the whole time. Like, I'm not going to just do what they tell me to do, but I'm also not going to be, again, complacent. One thing that I learned from Brad Feld a few years ago. He has a blog post, you probably can still find it, where he talks about his own angel investing. So he's a major fund manager and has hundreds of, almost $1 billion under management, if not more by now. But he also does a ton of angel investing, including investing in our fund as an angel. And he wrote this as like the guy who wrote the book I have 3 of his books on my bookshelf. He wrote this blog post a few years ago that said, when I angel invest, if I angel invest 25, 50, 100K, I'm not doing a bunch of diligence. That's my strategy. I'm not going to do a bunch of diligence. It's going to go on instinct and so I looked at that a lot, and our check sizes are 25K to 100K. And I said, what makes the most sense here? Are we going to get in the way of our founders? Or are we going to give them a streamlined approach to make it accessible to reach us, and then give them the relatively fastest answer we can, just based on how much money we have at the time? Are we going to just stand in their way over and over again and being afraid? And that has come back. So there have been 2 or 3 companies of our 130 that have come back, and there have been issues that came up a year, 2 years later because of the diligence we didn't do. To me, that's worth it. To me, it's worth it to get into the good deals and to give that confidence behind a company. So it's a balance, and I know I answered that for a long time, but it's a balance of you're able to, you can do as much diligence as you want. You can have a standard that I'm going to take you through 2 months of diligence, and if you don't like it, then I'm not the fund for you. And you could have documents after documents, which we now have, or you can play it a little bit looser, like an angel might, and anything in between.
Thank you.
And I'm just gonna, I'm going to have to go in a few minutes just because my voice, I know you've been alerted about that. You probably hear it. I've just been talking for like a week straight. Well, like years, but the last week for the book launch has been really taxing on my voice. So the last section of my book is about self-care. So I practice what I preach. So we have probably time for one more sourced question, if there is one. If I don't know if anyone else had one, or if Jay wanted to do his follow-up.
Hi, this is Steve. I have one.
Hey.
What can you? I'm gonna audible your book today.
Awesome.
Fascinated by your story, and Taj and everyone here. Thank you for putting this on. But I heard the snippet of you being at the airport, writing about VCs, telling yourself how you belong at the table in your VC, and that was really touching for folks like myself. Can you kind of just? I'm sure that you sparked a lot of minds and a lot of hearts with that. Can you kind of talk more about maybe what is outside of the book that maybe you can discuss here in this call as well, that speaks to that
about
journey?
During that time?
Yeah.
Yeah, I have had, and I'm so grateful to you for picking up the Audible. I have had housing insecurity for most of my life, in one way or another. And I've also had where I've been in other situations, but it's been pretty much like that. I've had places to live. Thankfully, growing up, I had a place. I didn't have a place to live, thanks to my mother. But as an adult, just kind of bounced around. And during that time, I mean, I had the book, it really goes into it. But I kind of had exhausted all of the goodwill from most of my friends. Like, some of my friends will reach out to me now after they read the book, and they're like, why did you sleep on the floor? You could have called me. And they think that now, but honestly, back then I had already spent all of that. There was a limit, and I just didn't have it anymore. So I wanted to be safe. I wanted someplace that was safe and that didn't feel like the end. I needed something I needed to be around other people, and I needed it to be something that was like a transition. And one day I said, oh, the airport, because I didn't know where I was going to go. I didn't have any money at all. So I was like, I don't know where I'm going to go. So the airport made sense to me. There's also a train inside San Francisco airport that's accessible outside of the gates. So if I needed to get to Silicon Valley or get up to San Francisco City proper, I could go either way. And that was like a $7, it's pretty expensive train. So I'd have to figure out how to put that money together to do it, but it was good for meetings. You know, it was like, if I could figure that out. And I remember like passing by the same woman who worked at a little store outside the gates over and over again. And she was so tired of seeing me. And I remember going in once and I was so hungry. And I was like, I have like 60 cents. Can I get a Hershey bar? And she's like, no. So now, I know that's sad, so I'll flip it for you. Now I have before all this happened with COVID, I had such a high membership to Virgin Airlines and Delta that I was always in first class. So I would land in San Francisco airport, and every single time, especially if I was on Virgin, I would walk right by where I used to sleep. And I would just be going from my first class seat to my driver to my hotel, which was nice. And I would just think back to that and like say, that was just a few years ago. And I didn't know it was going to get better. And it got so much better. And it's going to be okay. And the best part of it is that I got to stay myself. I didn't have to like give up any of myself for it. So if it's inspiring to you, that those first 5 minutes that we put online, the audio, I think what I've tried to make sure everybody understands about this book, because it hit me a few days ago. I was like, wait a second, people think that I'm trying to get them to read a book about me. I'm trying to get you to read a book about you. This book is about you, and you'll see that when you get into it. So I can't wait to hear what you think of it.
Thank you so much.
No problem.
Sounds good. Arlan, if I could just get you for one more question, if you don't mind.
Let's try. Let's see how long it is. I'm really struggling with my voice right now. I know I cut it in half. You did have 90 minutes, and I do appreciate you, but let's see what the question is.
Okay. No, yeah, I promise I'll make it pretty simple.
Cool.
What is your advice to aspiring entrepreneurs or people that would like to enter the VC world at some point?
My advice, honestly, is pick up my book. I just give so much information packed in this book about starting a company, pivoting a company, getting into venture capital, getting into being an angel investor, becoming an employee of a company, looking at the world a different way to figure out what you want to do next. That's where I would start. I go to itsaboutdamntime.com. I would make Google your best friend, or whatever, Google, yeah, whatever search engine your best friend, and just look up things, listen to podcasts, listen to go, invest in yourself, invest time, invest money, save for it if you don't have it. How did I get to a Stanford $20,000 Stanford course after being homeless, or after and before being homeless? You can make that happen. You can make it work. It's not easy. It's just not comfortable. But just really, the first chapter of my book is about becoming money through information. That's the thing you have the most control over. So I'm going to stop there because my voice is done.
Yeah, no, I appreciate your time, Arlan, and accommodating this interview, and look forward to finish your book. It was really good, and I encourage all of you to get it from Amazon or from all of the outlets. Thank you, Arlan. Appreciate it.
Thank you so much. I really appreciate this. Thank you all for being here. What a great group.
All right, thanks everyone.
Bye, everybody.
Thanks, Chacho, by the way, for organizing this interview. I greatly appreciate it.
Chacho's the man.
All right, thanks everyone.